Singapore is quietly stacking gold like there is no tomorrow. Why? Singapore has been making some interesting moves lately, ones that have caught the attention of financial analysts, economists, and investors alike. While much of the world is focused on inflation, market volatility, and geopolitical tensions, Singapore has been steadily increasing its gold reserves. But why? And why now? What is driving this quiet accumulation of one of the world's oldest forms of wealth? Gold has been the foundation of wealth and power for centuries. Unlike paper currencies that can be printed at will or stock markets that fluctuate wildly, gold holds a unique position as a universal store of value. Empires have risen and fallen, but gold has remained a constant measure of wealth. Throughout history, civilizations have recognized gold's intrinsic value. The Egyptians adorned their pharaohs with gold, believing to be the flesh of the gods. The Romans minted gold coins, ensuring their economy thrived for centuries. During the age of exploration, European powers sought gold as the ultimate symbol of economic dominance, fueling conquests and trade routes across the world. However, gold's true power is revealed in times of crisis. When economic systems falter, people turn to gold as a safe haven. During the Great Depression, the US government even went so far as to confiscate gold from private citizens to stabilize the dollar. In World War II, fearing economic collapse, many nations secretly moved their gold reserves to secure locations. When the US abandoned the gold standard in 1971, inflation surged, but gold prices soared as investors sought stability. More recently, the 2008 financial crash demonstrated gold's resilience. While banks collapsed and real estate markets crumbled, gold surged in value as investors lost trust in traditional assets. The same pattern repeated during the last pandemic, when governments printed trillions of dollars in stimulus money, causing inflation concerns. Gold once again became the last refuge for those seeking financial security. No matter the era, gold stands firm, is not tied to any country or financial system. It is an asset that outlasts governments, economic policies, and global crises. When faith in paper money fades, gold remains. Now let's talk about Singapore. This tiny island nation has always been known for its strategic thinking. They don't just react to global events, they prepare for them well in advance to ensure that economic resilience and national security remain intact. In recent years, Singapore has been quietly increasing its gold reserves, a move that signals careful planning in response to the shifting global economic conditions, especially now with the rise of multipolarity. In 2021, the Monetary Authority of Singapore, or MAS, made a significant move by adding 26.3 metric tons of gold to its holdings, the first major purchase in over 2 decades. This was not a one-time event. In 2023, they bolstered their reserves once again, further solidifying their position as a nation that prioritizes financial stability. And now in 2025, they continue to stack more gold. But why? There are several key reasons behind this strategy. First, gold serves as a hedge against inflation and economic downturns. With global uncertainty such as rising geopolitical tensions, supply chain disruptions, and fluctuating interest rates. Second, gold adds diversification to the nation's reserves, reducing reliance on traditional fiat currencies. With many countries facing concerns over de-dollarization and potential shifts in the global financial order, Holding more gold helps Singapore maintain economic independence and security. Lastly, Singapore's gold accumulation aligns with a broader trend among central banks worldwide. Countries like China, India, and Russia have also been aggressively increasing their gold holdings. Singapore's approach is not just about hoarding wealth, it's about long term vision. By strategically increasing its gold reserves, the nation is reinforcing its reputation as a financial powerhouse that is always prepared for the next global challenge, and that increases investor trust. Singapore was not always a gold powerhouse. In fact, during the 20th century, it did not even hold much gold at all. Instead, it built its wealth through finance, trade, and technology, transforming itself from a small colonial trading post into a global financial hub. Its leaders, however, have always prioritized economic resilience and long term stability. In the wake of the Asian financial crisis in 1997 and the global financial crisis in 2008, Singapore took careful steps to diversify its reserves and reduce reliance on fiat currencies. While other nations struggled with inflation and economic downturns, Singapore focused on strengthening its financial system by encouraging investment in assets that could withstand global shocks. Furthermore, Singapore introduced policies to make gold investment more attractive. In 2012, the government removed the Goods and Service Tax, or GST, on investment grade gold and silver, positioning the country as a major player in the global gold market. This move spurred demand from both institutional and retail investors, thereby boosting Singapore's reputation as a safe and reliable gold trading hub. Today, Singapore is home to world-class gold storage facilities such as the Singapore Freeport, which caters to high net worth individuals and central banks looking for secure, tax efficient gold holding. Now let's zoom out and look at what's happening in the world. The global economy is on shaky ground. Central banks across the world are engaging in aggressive monetary policies, printing money at unprecedented levels to sustain economies still recovering from the pandemic, banking crisis, and supply chain disruptions. However, this influx of liquidity has fueled soaring inflation and eroding the purchasing power of paper currencies. At the same time, geopolitical tensions are further destabilizing global markets. The US China trade war has led to a realignment of supply chains, pushing nations to rethink economic dependencies. The conflict in Ukraine has disrupted energy markets, driving up commodity prices and forcing nations to reassess their reliance on the dollar dominated financial system. Sanctions and asset freezes imposed on Russia have sent a clear message to other nations. Over dependence on the US dollar can be a liability in times of conflict. Many countries have taken note. A significant shift is underway as global powers move toward de-dollarization. China and Russia have been at the forefront, reducing their reliance on the US dollar in international trade and increasing their gold reserves. The BRICS nations, Brazil, Russia, India, China, and South Africa, are exploring alternative financial systems, even considering the creation of a new reserve currency backed by commodities. Meanwhile, Middle Eastern nations, particularly Saudi Arabia, are openly discussing pricing oil in non-dollar currencies, threatening the long-standing dominance of the petrodollar system. Singapore sees the writing on the wall. As a global financial hub, it understands that the future of finance is shifting away from traditional Western-led monetary systems. While other nations scramble to adapt, Singapore is making sure it's ahead of the game. However, cracks are beginning to show, with rising national debt, increasing geopolitical tensions, and growing dissatisfaction among emerging markets. The dominance of the dollar is being questioned. Now imagine a scenario where global trade starts shifting toward gold backed currencies.